What's going on, everyone? It's Caddy with Money Vesting. So thank you so much for joining today. We're gonna be live for about maybe an hour, maybe an hour and a half. So if you guys can hear me okay, just drop me a comment in the live chat if you guys can see the screen and if you guys can hear me absolutely without any issues. So welcome. I hope you guys can hear me fine. What's going on, everyone? Thank you so much for joining. Can you guys hear me okay? All right, perfect. Awesome. So yeah, we got about 15 minutes left for the markets to open. So I figured I'd go live very quickly. Talk a little bit about what's going on in the markets. We covered the weekly charts. I put out an update, so you guys are more than welcome to watch that as well. The weekly charts, very important. We broke down for all the stocks, for 12 stocks. We went over all the weeklies just to get a really good understanding of what levels are important, what type of patterns are forming for all these companies as well. So greetings from Jordan. Thank you so much for joining, Brian. I really appreciate that. Shout out to all of you guys. And that's awesome that you guys can hear me okay and see the screen as well. So very quickly, we're going to break down some things. So in terms of jobs report, ADP data showed that we added the most jobs in March. We're going to find out in the first Friday of April. Actually, I'm not sure if they're actually going to release that report this weekend or this Friday because it's a holiday. So this Friday, April 2nd, the markets are going to be closed in observance of Good Friday. So let's take a look at if they're actually going to release that report. It says employment situation. All right, so I'm not sure if they're actually going to release that, but we'll keep a close eye on that as well. The market won't have any it won't be open, so it won't be able to react or price that report in. But regardless, we added the most jobs in the last 6 months. Companies' payroll increased 517,000 during the month, and then February was revised up to 176,000 gain, according to the ADP research. And the median projections in a Bloomberg survey of economists called for an increase of 550,000. And job growth in the service sector significantly outpaced its recent monthly average, led by leisure and hospitality being the two leading sectors. So this is where we added jobs in the month of March. Leisure, hospitality coming in at 169,000. And then trade, transportation, utilities, all that makes sense, right? Because of the reopening of the economy, we're going to see more travel, more airlines, more cruise lines, more utility services. So hospitality, utilities kind of adding most jobs. And then professional business services also coming in third at 92,000, 83,000 each. Construction, it was a little bit lower, 32,000, probably like third or fourth or fifth. And then financial activities or services, information actually went down 7,000. So that's about that. And then this right here is the yields are gaining again. So we covered that in our morning market update, right? So let's take a look at where the yields are trading right now. So we are 10-year yields up another 1%. Trading is as 1.721. Walgreens reported a strong quarter. That's awesome. That's great. Yeah, it should be a fun day for Tesla, for NIO. This is going to be all the charts. So Tesla's up over 1.74%. Pre-market, as of the time of this video, this is going to be all the pre-market charts. So Apple is pulling back a little bit. It was much higher. It's still up close to 1.25%, back over 120 levels. And then this right here is going to be NIO up over 3% pre-market. We got Palantir up over 2% pre-market. We got Tesla up over 1.7. And let's actually take a look at all these stocks here. All right, so NIO up over 3. We got NNDM, Nano Dimensions, jumping up over 2.5. Xpeng had a rally yesterday, right? I think Xpeng was up. So it was up over 7% yesterday. So yeah, that was a pretty significant move. Is there any other news? Boom, right here. This is what I was waiting for because we broke it down in our previous analysis on Xpeng because this week was in fact the week March 29th, right? So I'm sorry, I have all the dates mixed up in my head. So March 31st, so they were actually doing that autonomous driving test this week. And they were supposed to start and end in Beijing for Xpeng. So this right here is probably the report. So leading Chinese smart electric vehicle company today announced consolidated results of its 3,000-kilometer navigation-assisted autonomous driving expedition, China's longest real highway autonomous driving challenge by mass-produced vehicles. Again, we talked about this over the weekend, how they're going to be doing that this week, and keep a close eye because I think there were like over 200 journalists that were following this journey for Xpeng. Right, so a very, very important week for Xpeng P7 fleet, which drove 3,600 kilometers from Guangzhou to Beijing with 2,930 kilometers highway driving under the control of NGP. That's going to be the navigation guided pilot. Achieved an average of 0.71 human driver interventions per 100 kilometers. So that's basically an average of 0.71 human driver intervention. Setting a new benchmark for long-distance autonomous driving by mass-produced passenger vehicles. Arfan, thank you so much. I really appreciate that. Let's take a look at what you said. So, are you in Pakistan? It doesn't matter. Just curious. I am from India. Yeah, so born and raised in India, and that's where I'm at right now as well. So again, thank you so much for that donation. So I'm not really sure how to basically gauge whether this is good or bad. I mean, they're putting it as setting a new benchmark for long distance autonomous driving. But 0.71 human driver intervention. So I'm not really sure what that metric looks like per 1,000 kilometers. I'll have to do some more research. But the expedition has fully challenged the robustness and reliability of the NGP function. The results demonstrate that it's not only the strongest, but also the easiest to use autonomous driving function for production vehicles available in the market. Chairman and CEO of Xpeng, we strive to become the world's top autonomous driving hardware and software provider, and our strategy and R&D capabilities place us well in achieving this goal. And under the control of NGP, the average success rate for lane changing and overtaking was 94.41%. So that's actually a good number. So this is a pretty easy to understand number as well. But again, I will have to do some more research on what that represents. So if you have any understanding of what that 0.71 human intervention per 100 kilometers mean, let us know in the live chat. Xpeng. Oh, it's now Xpeng? That's good to know. That's good to know. So yeah, I do apologize for the mispronunciation. 228. It wasn't 200. It was 228 auto journalists and EV enthusiasts and industry experts participated in the expedition, driving a fleet of 12 to 15 P7s, visiting 10 cities and 6 provinces along China's eastern coastal corridor. And the route was chosen to cover some of the most complex yet representative road conditions and driving scenarios in China. So the NGP delivered stable performance in rainstorm conditions, passing through tunnels and on the highways and mountain areas during the 8-day expedition. I really wanted to see that. Like, if there was like a live stream that was going on, I would have loved to see that entire expedition and how these cars basically navigated like through these 7 cities. Because this is a pretty big deal. Like autonomous driving, like that's going to be huge in the future. And to be able to see like one of the leading manufacturers in China to actually perform this entire test was pretty amazing. NGP Highway Solution provides navigation-assisted autonomous driving from point A to point B. And the NGP was enabled P7 strong underlying X-Pilot 3.0 autonomous driving architecture. So all in all, I mean, a pretty strong report, and it was up over 7.5% like in one day, and then it's up another 1.8%. But it still has a lot of recovery to do. EV sector has just been getting, beaten down time and time again. With this global chip shortage, of course, with China, it carries another significant risk premium that you're going to be paying. But regardless, like overall, industry-wise, very, very bullish on the industry, on the growth of these companies in the future. Of course, there's not going to be 10 different winners, right? There's only going to be a few of them, and in reality, there's only going to be a handful of winners. So Tesla and NIO are kind of like the 2 companies that I'm heavily betting on. But it still creates a lot of room for companies like Xpeng and Li Auto and a lot of traditional manufacturers as well, right? GM, Ford, they're kind of tapping into that sector as well. So Tesla up over 1.5%, back over 640 right now, just struggling under $650. Let's take a look at the 1 minute. We're going to bring out the extended hours as well. So yeah, I mean, we're seeing a little bit of a pullback pre-market. So coming in from like 9:04 a.m., we've just been coming down from like highs of 649. So still getting rejected at 650 levels. Yeah, it would be nice if we went into the long weekend in green. That would be very nice if Nasdaq can close out the week green. If these stocks can also close out the week green as well. But Apple is still up a little bit over 1.3%. GameStop is up over 1.5% if you're trading that as well. Trade Desk up over 1% right now. Boeing another 1% on the day. It was up like 0.5% yesterday. And by the way, Boeing is also part of the ARK Space ETF that actually was launched on March 30th. If you guys want me to do a video on that, let me know in the live chat. I would break down each and every company, and I'll also do a technical analysis, although there's not going to be any data available for us to look at. So if you were to look at ARKX, you'll notice that there's only been one day it's been trading, right? Today is the second day. So March 30th was yesterday, is when they traded for the first time. That was the debut, and today is the second day. So if you guys want me to do an analysis on this fund and what my thoughts are, just let me know in the live chat, and I will go over like those companies, the holdings that they have. Some of them were really odd. Like some of them kind of threw me off. Like they've got Netflix in there, they've got Amazon and JD.com in there as well. So maybe, there's no rule of thumb how many stocks you need to include. Maybe there were like some fillers in there or some like randoms that they included. But I'll kind of share my thought in that video if you guys want me to do that. And then we'll also kind of go over some of the technical analysis as well for this ETF if you are investing in this. But yesterday it was down roughly 1%. Pre-market it's up over 80 basis points, trading as low as $20. Nvidia up over 71 basis points as well. AMD is up over 78 basis points, so pretty much the same movement pre-market for both of those chip makers. TSMC also kind of in the same boat, up over 0.5%. The semis have just been getting hit hard in 2021, right? What do you guys think about the semiconductor industry right now? What do you guys think about some of those chip makers? What are your thoughts on Nvidia, AMD, and TSMC? Like they've just been getting beat down with this global chip shortage. Netflix is up slightly 47 basis points, so not a whole lot of movement there. And then Pfizer, Walt Disney are slightly in the green, such as United Airlines, Carnival, Southwest. And then Johnson & Johnson, Delta Airlines, I would put them in the value bucket, and so is ExxonMobil, Nordstrom, and Chevron. Let's take a look at oil prices very quickly. Netflix is there so they can watch movies on space. I love that. Yes, that is probably the reason. Alright, so let's take a look at, so this is what I wanted to talk about, very very important as well. We've got 4 minutes left for the markets to open. I'll kind of set up this chart very quickly. Let's just go over to this one. Alright, we're gonna go do this. I'm gonna set up the 1 minute for the QQQs and for the SPYs. So, what do you guys think about this new infrastructure bill that's about to get passed for over $2.2 trillion? I wanna hear from you guys. And guys, make sure that you guys drop a like as well in case I forget. So we have a little bit over 300 people watching. So again, make sure that you guys drop a like. It really means the world to me. Helps out the channel in a tremendous way. So this right here is going to be the bill. So the $2.25 trillion spending bill and corporate tax hikes. So we're going to talk a little bit about this very, very quickly. So Biden's plan would increase the corporate income tax rate to 28% from 21% and set a 21% minimum tax on global corporate earnings. So this is potentially in the works for next year, starting 2022. And we covered a very, very in-depth video on the macros on the national debt and how that's sitting at well over 28 trillion right now. You can even go over to certain websites to take a look at it, minute by minute where it sets. And then there's only 2 ways that you can actually, pay off or service that debt or control that debt. The first one is increased tax revenues. So the government makes most of the money through taxes, right? Taxes is the main source of income for the government. So that's how they pay for the spending that they do, right? For all this deficit, and also how they service their debt on all these interest payments that are coming in. That's how they pay for that, for all that stuff. And the second one is, cut spending in the first place. Don't spend as much money so you don't have that much deficit. And if you don't have a deficit, that's not going to be added to the national debt. In case, instead, you're going to have a surplus, and that's going to allow you to pay off some of those debt. But if you cut spending, that's going to reduce your standard of living. That's going to ripple down into a lot of different things, right? If you don't spend, you're not going to grow, so to speak. So that's the plan, is to basically fully pay for the investments in this plan over the next 15 years. 15 years. That's kind of like the plan, is how much all the tax revenue generated is going to pay for the $2.25 trillion over the course of 15 years. And this is a 4-part 8-year plan, dedicates $620 billion for transportation, provides $650 billion for initiatives tied to improving quality of life at home, like clean water and high-speed broadband. This is important for like 5G because fiber networks in China are much better than that in the United States, so that is definitely important. $580 billion for strengthening American manufacturing, $180 billion for which goes to what's build the biggest non-defense research and development program on record, and $400 billion to address improved care for the elderly and people with disabilities. So that's kind of like the breakdown of the entire plan. The only thing that kind of concerns me, and we've talked about this in quite detail, so the markets are about to open in about 2 seconds here. So, all right. So the Nasdaq up over 59 basis points right now, and I'll kind of address the money supply issue in just a second. And this right here is going to be the QQQ, or the SPY ETF here, up over 17 basis points. So we're seeing that morning pull down for the QQQ, pulling back, and this right here are going to be all the different stocks. So, all right. We got Tesla top left, we got Apple top right, we got NEO bottom right over here, and then we got Palantir, our favorite, most hated stock in the market right now, Palantir, bottom left. All right, so the market's overall pretty decent, much better than what we have seen over the past few weeks. But again, this is the morning pull down. We've seen this. I'm more concerned about what happens 30 minutes after the market's open, because usually what we see is like in the 5-minute, 10-minute charts, the markets kind of pull back, consolidate, and then if they rip higher, make new high of days, then that's strength coming in towards the later half of the day. But right now, usually if we push up, have that morning spike, that's not what I'm a huge fan of. Like morning spike, and then we just kind of break down below the VWAPs, and then break down below the moving averages, and that's just, we continue start trading in this downtrending channel and just keep making lower lows for the day. So this is okay. This is very normal. We'll see if we still close the day on green. What do you guys think? Red or green? I want you guys to answer this in the live chat. For the Nasdaq and the S&P 500, are we closing the day in red or green? Let me know in the live chat. I would love to hear from you guys, from all of you guys, so let me know. Green. So SPY really pushing higher right now. And so is the QQQ ETF, back over 61 basis points. All right, so we got green. That's fantastic. All right, let's take a look at which sectors are actually leading on the day. So this is going to be the one-day chart. We've got consumer discretionary, that's going to be XLY, leading the pack right now. So let's take a look. Consumer discretionary is going to be XLY. Up top, then we got tech leading second. No surprises there. We got industrials, communication services, then we got financial energies like right in the middle. Utilities, real estate, and materials kind of struggling the most all the way at, and staples, consumer staples kind of struggling all the way down here a little bit. SPY really having that morning push. What do you guys think? A breakout over $400 for SPY? That's going to be a breakout over 4,000 for the S&P. So if I go over here, let's go over here. So SPX, that's going to be a breakout of over 4,000. Is that going to happen today? What do you guys think? S&P 500 breakout over 4,000. For the SPY, that's going to be $400. Alright, so we got the VWAPs here. Yeah, the QQQs are just going back and forth right now. There's just like so much volatility. The yields still up over 1.7 right now. We got AMD pushing up a little bit. We got Tesla up over 1%, still hovering over there. Twitter's up over 2%, so that's a little unexpected. We got PayPal up over 1.5. We got Corsair Gaming up almost 1%. We got Neo up over 2 now. So we are pulling back on this chart. So there you go. So Neo definitely had a little bit of weakness at the open. And so did Palantir. Actually, let me copy this very quickly. By the way, you guys, if you guys want to get access to a lot of other research analysis and these TradingView charts as well, the Patreon link is going to be down in the description below in case you guys want to join. Alright, so we're going to copy this and paste it over here, and we're going to paste it over here. It is a different day. I agree, it's a different day. It's a new day, new opportunities, right? So Enphase back over 157. What do you guys think about Enphase Energy? Have you guys been watching this stock at all? Yeah, in my opinion, like, all right, there we go. So now we're starting to make high of days after the initial push down. Apple back over 1.5%. Tesla also. We just need Neo to break out over its middle VWAP. So that's going to be the yellow line you guys see, currently sitting at 38.45. And then start making some high of days, right? Break out over $39 per share. That's going to be really important for Neo. Look at Palantir. Look at those candles. QQQ pushing higher a little bit. We got the S&P also higher. High likely will break 400. That's great. That's awesome. Let's take a look at some of these other value stocks as well. All right, let's sort this by this. So Li Auto up over 3%. That's good. Palantir up over almost 3. We got Wayfair and Trade Desk also up over 4%. Trade Desk has been down a lot, like in the last couple. Yeah, like it's been down since like. This is December. Like December 23rd was like the last time we hit a new all-time high. It's like 972. Yeah, this stock is like down over 30%, if I'm not mistaken. Alex, what's up? Hello, hello. All right, so let's take a look at Trade Desk here on the daily. Actually, let me just go over to Neo. We're gonna look at Trade Desk here. The Trade Desk is down like 33% from the highs. Definitely, I mean, I'm definitely gonna look into this stock a little bit more, in detail. I saw like what the valuation looks like. Currently sitting at 30 billion, while the revenues 2020 were 836 million. So it's a little bit over 30 times sales. 36 times price to sales. PE sitting at 124. So yeah, it makes sense why it was like. Even after a 33% discount, guys, like this thing does seem, richly valued given the current market environment we're in. All right, Palantir, Tesla, and Apple are pushing, but Neo is somewhat struggling still, while its peers do actually really well. Li Auto and Xpeng. Li Auto now up over 4%. So yeah, just been green candles here. Nothing but green candles. Need a dip on Corsair. Corsair's been there. Like Corsair's been like hovering around $30, $32 for a really long time. Like it's just been there. Like, in our growth portfolio, I've been adding like a little bit. Now I'm in a position where like I'm just raising my cash exposure. In case everything just starts rolling over once again, so I can just go out there and buy more stock. So, but like over the past few months, I want to say now, like that's February and March, like I've just been putting more money into the markets. It's like throwing it into a fire pit at this point. It's like everything you buy just straight down. AMD is like not cooperating at all. And I was surprised to actually read up that it had a price target of $17. Like some Citigroup analyst has a $17 price target on AMD. Because they think that the valuation is too high. So Palantir also with a huge push higher right now. Tesla up over 2.6. We got Xpeng up over 2. We got Apple up over 1.5 now. Nvidia up over 1.5. And then where is AMD? AMD is over here, so up over 1.45, so back over $77. So Neo is selling off for some reason. Let's take a look at Neo. What's going on here? Yeah, it's been selling off, so it's been making lower highs now, right? So you can already almost tell that it's gonna have a pretty, it's gonna have a day where it's gonna struggle a little bit because it's now it just made a new low of day. So that's never good. Like in terms of like any type of technical analysis, like if you were to look at this lower low, you know, that's just a sign of weakness right there. That's just, you know, we're going lower than we did the previous time, so that's. Neo could be part of the Archego sell-off. Like, why would you say that? I'm just curious. Did a lot of banks have that, or like did a lot of institutions? I know that JP Morgan is pretty bullish. I know that some of the other banks are bullish too, but not sure why they would be part of that sell-off. I think it was pretty much Viacom, Discovery. It was concentrated to some of those. Yeah, you're right though. Actually, there were some Chinese companies. Baidu was one of them, but I'm not sure if Neo was part of it too. Space ETF. This is probably the first space ETF out there, right? I don't think there's anyone's ever constructed anything like this. All right, Facebook up over 65. Let's take a look at what's red today. So American Airlines, Nike. Nike's been having issues with China, right? I mean, there's been certain reports that came out. I was reading them. And really not sure how that's going to play out, but I think it had a pretty significant sell-off here. So it gapped down, and it was down a little bit over 3% here, but it's been kind of consolidating sideways from like highs of 144. So a huge gap down, it came back up to fill that gap. Palantir signing with a SPAC. Where did you find that information? I would love to read up more on it. If there's anything new that came out, let's take a look. Palantir. So I don't think this is it. Oh, what? An electric vehicle takeoff and landing jet company is going public via SPAC with a merger announced Tuesday morning. The SPAC deal, Lilium announced a merger with QL acquisition, valuing the company at pro forma equity value of $3.3 billion. While acquisition leader is former General Motors North American President Barry Engel, who will join Lilium's board of directors. A pipe of $450 million of SPAC merger included investments from Valley Gifford. I think they were one of the first ones to actually buy. Forgot what it was. Was it Neo or was it Palantir? It was one of those stocks, or maybe Tesla. One of those three stocks. I forgot. Like, there's just too much. BlackRock, Tencent, and then Palantir Technologies and others. That's interesting. So Lilium will receive proceeds of $830 million. Is it trading right now? Let's take a look. Wow, it's just been selling off like since February 10th. It was trading as of 15. Yeah, that's probably one of the reasons why Palantir is up today. But wow, look at Apple, over 2%. Tesla up over 2.4. Neo is just struggling right now, up over 1.23, but it's still in the green. We'll see where it ends. Palantir up over 3.7. We got SPY and QQQ just through the roof here, up over 36. Not through the roof, it's a little bit. QQQ up over 88 basis points. Wow, Walgreens just broke a 52-week high. That's absolutely amazing. There we go, up over 5%. That's awesome. Congratulations to everyone holding and trading this one. Let's take a look at how they're reported though. Walgreens is a really good dividend stock too, right? Let me take a look at how much they pay. So TradingView shows 3.5%, but I'm not gonna trust TradingView because they have been wrong and they've been really inaccurate with the dividend yield stuff. So I'm gonna go with like roughly around that level is what they pay for dividends. So all right, hopefully they don't ask for my revenue miss, but managed to beat the consensus EPS for the second quarter fiscal year 2021. The company has raised. Yep, of course they did. All right, we're gonna find another source. All right, so Wednesday raised 2021 profit forecast after posting an 8.4% rise in quarterly profit on Wednesday. Pharmacies chains such as Walgreens and CVS expecting to benefit from the distribution of vaccines. Test last quarter, Walgreens said it expected to profit from its vaccination program in the second half of 2021. Wait, is that why is it? What static are you talking about? I'm gonna hide that comment, but still I'm gonna ask Isaac, what static are you talking about here? Yeah, Neo really giving up on some of those gains, right? So it's just been making lower lows throughout the day, like since the market opened. And the Nasdaq up almost 1% right now, and so is SPY. SPY is up over 37 basis points. So we're seeing growth taking over once again a little bit today, right? It's not an indication that it's going to happen again. It's going to be a recovery for tech and growth. We still have to take it, day by day, week by week, because we've seen kind of like the markets have this dilemma of whether one day growth will pick back up, one day value will kind of skyrocket once again, one day we'll have work from home trend or trade and stocks do really, really well. All right, let me turn that off real quickly. So I'm just gonna turn the. All right, should be much better now. All right, so make sure that you guys drop a like. You guys, I really, really appreciate that. We've got a little bit over 400 people watching. So again, thank you so much for joining in. And we're gonna talk about the money supply now, because this is really important. This is this is macro stuff that is very, very sort of critical to where the markets go and equity markets and different asset classes. So if you're using your TradingView platform, if you're using this platform right here, you can simply go to M2. That's going to be the money supply indicator, and you'll notice that coming in since I want to say 2006, 2000, like even 2000s, you'll notice that is it better now? Is it better? So let me know in the live chat if it's better. If you guys can hear me without any issues. Sounds like I'm at a beach. All right, better. All right, perfect. So, this right here has been the money supply for in the U.S. economy, and you'll notice how we've seen a parabolic move coming in from February 2020, right? So it's been absolutely going up, and this was a 25% increase. So 25% of all U.S. dollars created in 2020, right? 27% roughly. So the question really is, how long can this persist for, right? The debt to GDP ratios are of course something to look at. I don't know if it's going to show the national debt here. Total public debt. So yeah, that's roughly 28 trillion, right? So if you were to look at this, you can already tell, right? 28 trillion is what it's now. And we're putting another 2.25 trillion, another fiscal package getting passed. The money supply is going up, right? So the only issue we have is how are we going to service that debt, right? It's expected to go up to 48 trillion, the national debt is. And perhaps that's the only concern that I have with the U.S. markets and the economy is that, when there's demand for the bonds, when there's demands for the U.S. treasuries, and where other countries, international countries, are financing that debt or that deficit spending, it's great. But once that demand goes away, if that demand goes away, not once, but if that demand goes away, what is going to be, what's going to be the reroute, right? So that's kind of like the biggest concern. Again, it's not going to affect the markets in the short term. The short term, there's going to be two things that we need to worry about: inflation and taxes. And where are they potentially going to go, right? Inflation is perhaps a more shorter term thing, and then taxes over the next year, because we already read that 28% corporate tax is going to lower those EPS values, those valuations almost instantaneously, right? So if you look at some of those companies, that's what's going to be a little bit of a negative catalyst, so to speak, for the market. But regardless, QQQ's up. Let's take a look at NEO. NEO now almost red on the day. This is pretty sad. I mean, NEO was up a little bit over 3%, pre-market, but it's just been trending down on the day. So you'll notice that we're up only 30 basis points. We'll see if you see any type of a recovery for NEO stock. So again, we're getting rejected at that $38.50. The high for the day was $39. So we're still getting rejected at this level. So we'll see if he actually closes above $38.50 or not, right? Yeah, Anhito, that's a great point for a technical analysis like tutorials and courses. I'm actually thinking about I'm working on a trading view tutorials. Like that's gonna go over every single piece, like from A to Z. Everything on trading view, right? That's going to be part one. Fundamental analysis is going to be part two. That's going to have like a lot of different types of valuation metrics, lots of different types of models, and how to actually look at companies, different income statement, balance sheet, types of analysis. And then part three is going to be technical analysis. If that's something you guys would be interested in, let me know in the live chat. I would love to get some more feedback and if it's actually worth the time to actually make something like that, right? So again, trading view is going to be part of it. Complete tutorials on how to navigate through like entire platform, creating new charts, creating new technical indicators, working through the code, testing different strategies, creating watch lists, creating alerts, different types of calculations. So we've covered how you can actually find out relative performance, right? So Amazon divided by like SPX gives you like the relative performance of Amazon stock relative to the S&P 500. So everything is going to be included in that. And then of course fundamental and technical analysis is also going to be part of it. So NDX is definitely flying. You're right. QQQ up over 1% now, and the S&P is kind of leveling out, up over 35 basis points. So, all right, sounds great. That's awesome. 100% worth it. Great. So I'm gonna put together like a whole schedule for it. It's gonna take a lot of time with the schedule, but I'm gonna work on it. Couple hours a day, and it should be ready, but it's going to take some time, right? It's going to have a lot of really, really important information kind of packed into those tutorials and courses. Yeah, that's a great point. Dollar up, yields up, and equities up. So again, it's all about the correlation between the dollar, the yields, and the equities. And we knew like everything is going to run its course, right? Everything is going to play out the way it's supposed to play out. The yields, I mentioned the worst case target is 2%. That is still intact right now. Where are they, right? 10-year yields are at 1.723, right? So they're still on their way to 2%. That's where I personally see them hitting like the worst case target. But that doesn't necessarily mean that the Nasdaq and the equity markets is going to take a hit. It's still a possibility, but it's a low probability possibility. The two more imminent risks that I see for the markets are going to be inflation and taxes, right? Those are two things that I would like you guys to pay close attention to in the future from a macro standpoint. And that's why we're going to break down, every time Jerome Powell speaks, every time we've got the CPI report coming out, every time we have more information on energy prices, right? All those things are going to be really, really important, because it'll give us a good understanding of what inflation would look like in 2021, next year, following years. Because some people out there, I kid you not, are basically thinking that we're going into hyperinflation with all this money supply. It's going to run past over 5-6%. I don't know if I agree with that. It's hard. It's hard to kind of understand, what people actually do with their money, because we've got savings accounts kind of flushed with cash, and how they choose to allocate that money is going to be the main thing. Whether they spend it, whether they invest it, whether they save it. Those are going to be three things very important for the equity markets and for inflation. So, what do you guys think? What do you guys think? Just answer between three things, right? We've got record level savings. We've got so many people with a lot of cash. But what do you guys think? Spending, saving, or investing? What are people doing with their pent-up savings once the economy reopens back up? Let me know in the live chat. What do you guys think? Juan, I will get onto the Patreon chat as well. We're doing a private live stream this weekend, but I try to respond to everybody's private messages like in one go. So right now I have a little bit messages pending, so I will get back to those like by the end of today. So definitely you should, if you message me, you should see a response very, very soon. So spending, we've got investing, we've got spending. So roaring 20 all over again, people are gonna go crazy. Spending will be crazy. Interesting. Oil is higher, that has caused price hikes in travel. Yes, we've also got the OPEC meeting on April 1st, so just wanted to remind you guys of that as well. That's what, tomorrow, right? Yeah, so tomorrow we've got the OPEC meeting. They're going to talk about oil, production, supply. That's going to result in, where energy prices go. So it's crazy how everything kind of affects our day-to-day lives in so many different ways. Right now the Brent oil, crude oil, just sitting roughly at $64 a barrel, and ExxonMobil, Chevron just pulling back a little bit. So expect markets to go down when the economy opens back up, as people will go back to work and active traders will significantly drop in numbers. And that's a great point. That's a great point, because a lot of people, because of the pandemic, were inside indoors, and they were basically taking on trading, day-to-day trading, and sudden inflation is highly probably. That's what Zaim said. I'll cut or change anything mostly after Suez. Yeah, that's true. I'd be really surprised if they cut production now. To basically jack oil prices because of the already backlog of what we've seen because of the Suez Canal event. All right, let's take a look at some of those stocks here. So Apple's still pushing up over 2.5%. We got Palantir staying up there. Tesla, however, Tesla coming down a little bit, getting rejected at 650 levels. The support level to watch for Tesla today is going to be roughly 620. That's the level from our yesterday's analysis. If I go over to this, you'll notice that Tesla, we had mapped out $620 right here. I mean, it's a pretty significant doji candle, and we're just so close. We're so close to those moving averages, right? 660 is the resistance that we talked about. Not quite there yet. So 654 we got rejected. That's going to be the level to watch. And then 700, now even call it 690. This is going to be the level, that I would be very interested to watch for Tesla, because that would put us back over those moving averages after so long. Like the last time we were trading above those moving averages was back in February 10th. So very, very interested in that to see where it goes. I mean, we only need a breakout of 7%, 7.5%. That's like 1 day's work for Tesla. For NEO, it's the same story. We're just getting rejected at 38.50 right now. And the support is going to be sitting at $35. We did have some type of a double bottom. Oops, sorry about that. So we did have a double bottom here for Tesla stock. So NEO, excuse me. So, it's very important for us to close above 38.50 today. Hovering around $38 right now, up over 1.2%. So we did push up higher a little bit. Yep. NEO pushing higher. SPY is crazy. Yeah, it's just going sideways. Versus NEO, QQQ is still pushing higher, right? Making higher highs. High of days at 318. Please provide a support resistance list of tech stocks. Al, I just posted, literally, I want to say like 3 hours ago before the market opened, I posted a complete analysis on all tech stocks, 12 of them, and we also went over the weekly charts. So I would highly encourage you to watch that video as it goes over the weekly chart, which is very, very important for us to look at. So actually, let me go over and pull that up very quickly, right? So not sure if it's this one. It's not. So I think it was chart number 2. And all these are going to be available. I will make them available on Patreon as well on April 2nd. On April 2nd or 3rd, like the first week of April, I will make them available for everyone. All right, so we're going to go over to the weekly charts very quickly. Square up almost 6%. That's great. That's awesome. Sorry, I meant to say sudden inflation is highly probable due to pent-up demand and high levels cash that has been injected into the economy and people pockets for the past years. Yeah, so I mean that's what the expectations are, like a sudden spike in inflation, and then we're going to see it leveling out. That's what Jerome Powell has also been saying. Well, let's go over to Apple really quickly. So this is going to be the weekly chart, something that we talked about this morning. The trend line that Apple has been respecting for a really long time since the pandemic lows has been this, right? And weren't these like good times? Week in, week out, we've just got green weeks. Apple up over 14% in 1 week. This is like July 27th. But again, this right here, we're kind of like the lower highs. We broke out over the symmetrical triangle, made new all-time highs at 144, 145, and now we're just coming back down. And this is a support, right, that we're just validating right now for Apple stock. So we're just like kind of curling back out, right? We're just sold off. So we sold off. We're just curling back out. And, this could be either a bear flag, which is, in my opinion, quite unlikely that we see another breakdown below this level. But, curling back in. And then once those earnings are announced, when those product launches are also there, we could see another spike for Apple stock back to potentially 130, 135 levels. So we've covered Tesla and NIO. Let me go over to Palantir really quickly. This is kind of like a head and shoulders pattern, although we're still validating that support here for Palantir, which is good, right? So it's not breaking down below that support yet, right? $21, $20 is kind of like the level, and we are coming down below that. We came down below that support like earlier, so yesterday at $20.86 before now pushing up close to 4%. So that's kind of like the pattern that we have for Palantir right now. Next up, we're going to break down like Square. Is Square over 215 now? 225? That's great. So that's the support that we're validating for Square, right? It's been trading inside this uptrending channel for a really long time, like since the pandemic started. Right, so higher lows here, validated perfectly. These are going to be the higher highs, validated perfectly, and this is the first time we actually broke it down, and now we're just consolidating sideways, validating this support level, right? Which is going to be sitting roughly at $200. Previous resistance, we literally got rejected at this $200 level here before breaking out and then back testing that as a new support several times, right? So that's going to be the level to watch for Square on the weekly chart. I prefer looking at the weekly chart, so it's like a broader time frame, gives us a really good understanding of the whole picture, as opposed to just looking at the daily chart, past few weeks, versus like this right here, where you can go back as far as 12 months. All right, Tesla now back over 650. Do you guys think we're gonna break out over 660 today? We only got $10 left for Tesla stock to push higher. What do you guys think? Let me know in the live chat if you guys think that we're going to see a breakout over 660 today. It's kind of hard to say, Juan. Right now, we're just waiting on volume too. Like right now, the volume on Tesla is sitting at 7 million. Considering that that's only been literally 30 minutes since the market's opened. So we really need to see, whether we're going to see the Nasdaq push higher I mean, at least right now, it looks like it's going to continue. It's up over 1.3%, so that's a pretty significant push higher. I mean, what is really pushing, right? Let's take a look at SPY holdings here. So we got Square up over 6. We got Shopify, PayPal, Nvidia, Twitter, Apple. Wow, this is like literally the stocks that we covered this morning. AMD up over 2.2. Tesla's up over 2.5. We got Zoom up. We got QQQ, Netflix, Nextera Energy, DraftKings, Facebook, Amazon. We're seeing growth kind of take over once again, but this is again not an indication that we're going to see a reversal right away. This could be another one of those days where tech rallies, growth rallies, that's great, but then the following day we see that value and cyclical trade once again take over. But I actually read one of the comments from on another video that was really, really interesting, that basically said that tech, we use tech in almost every single facet of the business, right? Whether it's a value company or a cyclical company or an energy company, there's always an application of tech in that as well. So that was kind of really, really interesting, because regardless of what happens, whether it's a value trade or a cyclical trade, with this reopening of the economy, if those businesses continue to do well, that's still good for tech over the long term. Because companies like Microsoft, even if you have a construction company, you're still using Microsoft Teams. You're still using, Word or PDF or whatever, Adobe products, right? So that is still a positive for tech. And the only reason why we saw a rotation away is because others became more attractive, right? It's not like tech was no longer the play. It was because others were the play, right? Value and cyclicals. Thank you so much. I really appreciate that, Hub70. Yeah, so John, I couldn't agree more. I mean, we have to be cautious in those markets because we have seen, all the way up here. So this has happened so many times where the Nasdaq. I mean, this is a pretty strong day. I'll give you guys this. So Nasdaq, this is a pretty strong day, right? I don't personally see the Nasdaq turning red now. We're up over almost 1.5%, and so is the S&P, up almost 0.5%. So. But in the past, we've seen days where it would just push up, consolidate a little bit, push up, and then towards the end of the day, just boom, 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 selling pressure coming in the last 30 minutes for us to literally just close flat. And that's where a lot of weakness comes in, and that's translated over to the next day. So that's something to take note of. Today, yeah, we're having a great day for tech and growth, but this is not the time to be going all in on tech. The time to going all in on tech or buying more tech was the past few months when it's just been really, really down and depressed for these prices. Enphase, I'm still kind of on the fence with Enphase Energy. I want to get in under 150, but it's kind of one of those tough decisions. Yeah, I couldn't agree more. There's a lot of other indexes that are up as well, and we talked about the Nasdaq's outperformance relative to the S&P. So if you go over and type in NDX with SPX, we covered this very exact chart. And what is one thing that you guys can identify from this chart? And I want to hear from you guys as well. If I were to kind of bring you guys back, let's go over to the monthly chart here. All right, so this is Nasdaq divided by the S&P 500, and what is one thing that you guys can basically tell me about this pattern, about this whole pattern? What is one thing that you guys can tell me? So what this means is when the line is trending up, that means the Nasdaq is outperforming the S&P 500, right? Harry, I couldn't agree more. Yep, you're absolutely right. So Nasdaq is the clear outperformer, and it's happened since the beginning of 1985. This is as far as this chart actually goes. So actually, let me do IXIC divided by SPX. Let's see if we can actually go even further back. So yeah, this one actually goes back to 1974, And you'll notice that the Nasdaq is the clear outperformer here. And if you do the complete opposite, if you go like SPX divided by IXIC, that's going to be the S&P divided by the Nasdaq. It's going to be the complete opposite, right? It's the complete underperformer relative to the Nasdaq. So what that basically tells us is that time and time again, like over history, we're talking 1974, so we're talking like 25 and then 45. We're talking 45 years, 46 years worth of data here that basically says long Nasdaq, pretty much, because it will have these moments. And this is what I was trying to address in one of my previous videos as well, and which got a lot of criticism from people because of this small blip of sell-off that we're seeing over here. So like you look at it, this is the underperformance the Nasdaq has had, right? This is the underperformance the last couple of months the Nasdaq has had. But if you look at it time and time again in history, I mean, it's happened. We underperformed the S&P entire time here. We underperformed the S&P over here. We underperformed the S&P over here. This was a massive underperformance because of the dot-com bubble, right? If you go back further, underperformance, right? Underperformance. So to say that tech is dead and it's just not going to go anywhere, I don't know how I deal with that argument, because this is a small blip. And of course, a lot of people compare these levels with the dot-com bubble because we're trading exactly identically to those levels from 1999 to 2000s. But I disagree, because this right here, we went up too high too fast, right? So you'll notice that this was a parabolic move. So NDX over SPX. So let's go over to the monthly chart here. And you'll notice that, we were on a consistent uptrend. So this was a higher lows. So boom, higher lows here. We are just consistently pushing higher, pushing higher, pushing higher. And then a huge parabolic move after like 1997 all the way to the like top to like 3.3 levels, right? But now you'll notice that we have made our way back, but we have made our way back like slow and steadily, right? We've just been consistently going up. Yes, you can make an argument like since October 2019, this has been a more parabolic move, which can be compared to this, but the degree is much like this right here. This move higher is much smaller than this entire move. So to say that we're going to see another crash similar to the dot-com bubble is also, in my opinion, like an invalid argument, because there's a lot of valuation, there's a lot of support from actual revenues, actual earnings for these companies. All right, let's take a look at some of those stocks. So Palantir is up over almost $23 a share, up over 4%. Tesla is up over 3% now. And then we've got Apple up over 2.3%. NIO is still kind of struggling back and forth, up just over 1%. Yes, the S&P 500 did outperform the Nasdaq back in 2000. Yes, when we had the dot-com bubble. So right here, it was, the drop in the Nasdaq was more severe than the S&P 500. So, but they both dropped. But since then, like the recovery has been, the Nasdaq has clearly just outperformed. So even if we do see a drawdown, like even if we come back to like 2.8, right now it's trading at 3.3, like the relative performance wise. Even if we do come back down, over 45 years worth of data, if you look at it, the Nasdaq has been the clear winner. Is the point? Is the moral of the story is that the Nasdaq's been the clear winner. That doesn't mean that the S&P 500 companies are bad, and that should be a logarithmic chart. Here, let me do that. All right, so now it's a logarithmic chart. There we go. Yeah, so now it's log. So that doesn't mean that the S&P 500 companies are not good. Like they're great, but my portfolio is just more constructed towards tech and growth, a little bit skewed more towards that side versus value. And I'm actually going to be focusing on building a dividend portfolio as well, strictly for the income stream that can be reinvested back into those stocks as well. With dividend investing, you have to understand it's a long game. It's a really long game. Like you're not going to reap the benefits of dividends like over the next few years. This is like a more few decades type of deal where if you can get that dividend portfolio up and running and it's automated, like the dividends are going to literally be reinvested and they're going to balloon up to a point where it's just really, really nice to have that portfolio. Michael, thanks a lot. I really appreciate that. Thank you, and I'm glad all the videos and all the content and the information is really, really helpful. I am thinking about getting someone for help as well, because right now it's just been so much work. But yeah, my only goal is to provide as much value, as much information to you guys as possible, consistently, time and time again. So thank you. I really, really appreciate that. Yeah, I mean, you can make an argument that tech is overbought. Um, Being overbought is a little bit different than overvalued. I think you mean overvalued. Um, Tesla being worth more than all cars companies together, put together. Yeah, I mean, that is an argument for Tesla, but I feel like they have a lot of other vertical integrations, like a lot of other things that they can tap into vertically that don't get appreciated as often as enough as when people look at, when you combine GM, Ford, when you combine VW, when you combine BMW, like all these different manufacturers combine their net worth, or like their market cap is 300 billion and Tesla's trading at 600. Yeah, it's overvalued. But I feel like a lot of their businesses, like solar, like battery business, like those things were not even included in the estimate for Market Invest, which was pretty crazy. But in my opinion, Tesla, my price target is $1,000. We got a lot of analysts that are pricing it well over 1,000, 1,200. Thank you so much. I really appreciate that. Again, I really appreciate each and every one of you guys. Would you weight average on a losing trade? I'm not sure if I actually understand. What do you mean by weight average? Do you mean would you average down on a losing trade? Is that what you mean? Yep, so 660, it needs to break out over 660. We're just like 659, 58. Are you kidding me? To like literally 42 cents away. Palantir's up over 4. Apple is pulling back a little bit, up still over 2.5%, almost. Tesla is like an ETF of companies. That's the first time I actually heard that. That's a great point. Neo's up over 1.5, so we are pushing higher. Let's take a look at Corsair up over 2.5. We got Fiverr up over 6%. Shopify is up over 4.8, back almost up to 1,100. Oh, that's great. Congratulations on everything. Ex-military, so yep, that's awesome. Thank you. Thank you for all the support. I really appreciate that. Wait for reaching the oh yes, exactly. Okay, so average nail, it really depends on your time frame. So if you are investing for the long term, which is usually long term is like more than a year, but I personally believe that's like 3 to 5 years. That's like my projections for most of these companies. Then yes, it would make sense to buy more when they're coming down. But it's not like, if they're down 1%, you buy. It's down 1%, you buy. It's more like waiting for them to have a significant down day so that it can actually make a dent into your cost basis, right? So for example, if AMD, for example, right, if it's down over 10% in one day, yes, I'm gonna actually buy. Considering that there's no fundamental change in the business, I also read up on the catalyst, like why it's down over 10%. And if it's strictly because of a market sell-off, it's strictly because of a technical breakdown, then yes, 10%, 8 to 10% is going to be significant drawdowns, and could be over a course of a few days or in one day to make a significant impact on your cost basis when you are averaging down, right? A lot of people, I feel like, and I saw that in the comment section too, the past few months when the market was selling off, I feel like people were buying too much too frequently, all right? You have one red day, people are buying. You have another red day, people are buying. You don't have to buy every single day. You can just wait until everything kind of stabilizes, right? You can spread those out so you don't run out of cash, so you're not in a situation where, oh, I'm all in now, I can't really do anything, and now you're just waiting for the markets to do its thing. So that's a great point. I don't have FOMO for Shopify and for Square because those are two companies that, pricing and valuation wise, I feel like I'm not getting a great deal. And again, for great prospects and great growth for these companies, but just in the short term, I feel like the risk reward is still somewhat in the favor, to the downside because it's still trading at a pretty rich valuation. Like if you look at price to sales, price to earnings, still on the high end, right, for Square and Shopify both. So yes, there could be some FOMO, and in the short term, we could see some volatility. But the valuation doesn't justify for me to actually place that trade yet until we see some more weakness for those two companies. Not sure if we're going to see that, but I'm still happy to wait. So Tesla, yep, 660, we touched that level, and then we kind of consolidated sideways now. Apple is still trying to push higher a little bit. The idea of overvalue, undervalue is mostly based on historical data from market history and past century. I could not agree with this more because, we've talked about how companies are based on different valuations and how they're overvalued versus undervalued. But if you think about it, like all these metrics are also made up, right, to a point where, who's to say that 100 PE is overvalued versus 50 is, undervalued, or like what's the right PE ratio, so to speak, for that industry? Because just because it's worked like the last 100 years, and we've become accustomed, so to speak, for a specific price to earnings, price to sales ratios, for PEG ratios, enterprise values, doesn't mean that that's going to be the case moving forward, right? So there's a big debate about that. I don't want to get too much into it. So yes, people also invest from all over the world. So that's a great question. So I'm actually working on building out sort of more videos on how you can actually, and this is probably going to be on a separate channel too that I'm working on, and how you can invest from India over in the US. There's just so many applications. There's so many like companies that actually allow you to do that now that, I came back after 5 years and I'm surprised as to how many companies here in India allow you to actually trade and invest in the markets all over the world. It doesn't matter if it's the US, it's all over the world and absolutely commission free. So for $0, you can place those trades and you're good, right? So I'm gonna be making videos on that as well. So, all right, guys, I'm actually gonna end the live stream here. Looks like we're gonna potentially close the day green. A lot of stocks are kind of holding up, so that's good. They're kind of staying up there. Even NIO is making some type of a recovery here, so we're now up over 2.4%. Palantir up over 4.6%. We got Tesla up over 3.6%. Apple, AMD's up over 2%. We got, let's take a look. So Lemonade back up over 4%. We got ARKG up over 4%. Nvidia, Alibaba. We got Amazon, Shopify. So a lot of stocks pushing higher. We got the QQQs now up close to 1.5%. So that's good. And the S&P 500 up 40 basis points. So as soon as that leaves, Tesla will drop to 590. No, I hope not. I hope not. Yeah, I hope not. So we'll see. All right. Yeah, it's late here too. Like I'm gonna get some dinner and then just go to bed and then wake up and do the market update and those updates as well. So all right, I got your feedback on the courses and the tutorials. I'm gonna work on TradingView, fundamental analysis, and technical analysis. It's gonna be packed. It's gonna take a lot of time because I want to put out like the best researched work, information, and of course TradingView. I'm gonna go step by step, A through Z, everything that you need to know about TradingView analysis and charts, and by far, in my opinion, one of the best platforms out there for you to actually get access to the market, look at the data, and kind of keep up with what's going on with the news. And they've got a lot of features here that I haven't really gone over. All right, so I hope you guys enjoy this video and found it helpful, this entire live stream. Make sure that you drop a like. It really helps out with the channel. On April 1st, I will be updating everyone with the new charts. So if you guys want to get access to the Discord, the charts, the TradingView charts right here, which will automatically sync over to your charts as well, and get access to a lot of research, analysis, Excel files, PDFs. Like I share all these analysis with the Patreon members, so the link is going to be down in the description below. No, it didn't. Tesla didn't fall. A little bit. Like NIO is still pushing higher, so that's good. It won't go down, guys. Like trust me. I promise. Like today's strength, in my opinion, is strong enough for the markets to stay up there. and we are seeing kind of like the buyers stepping in. I can almost feel it. Unless we were seeing a lot of choppy trading back and forth, I would have been concerned. But right now with the QQQ's trend right now, the 1 minute, I can almost tell you with a lot of certainty. Like if I bring out the 21 EMA here, we're probably validating that. So yeah, we are just consolidating, trading above that 21 EMA. So I feel pretty confident on a green day. So I hope you guys enjoy this. Make sure that you drop a like. Really helps out with the channel. See you in April. That's actually a good one. Yep, see you in April. Because today is April 31st here. So again, have a great quarter. Again, I know this is a quarter end. Remember, April 2nd, Friday. It's a good Friday, so in observance of that, the markets are going to be closed. And we're done with March. April historically has been the strongest month, so we'll see how that comes to play. So again, thank you so much for joining in, and I will see you guys in the next video here.